Hey, y'all, welcome back to Housing Houston. I am your co host, Kayla Ewald with First American Title.
And I'm Sarah Lerner with Real Vest Property Management. We are so excited today to have a very special guest with us, Rolanda Watson. This is her second time on the podcast, and she's here today to share her expertise with taxes. She's a published author who's
Woo!
3 incredible books in the financial services industry, and she's a business owner of Rolanda's Tax and Professional Services. So, welcome. We're so glad to have you here today.
Thank you so much. I'm looking forward to enjoying time with you ladies today and to our audience.
Fantastic. Well, why don't you start? Because we know it's the end of the year coming up, and that's really why we wanted to have you on. Tell us what we need to know about preparing for filing our taxes before the clock strikes midnight on December 31st.
Yes, so yes, filing taxes will be coming up quicker than we imagine. When we're coming up to December 31st, one of the things I always encourage our clients and just taxpayers around is to make sure that you're ready with your record keeping. For our businesses, there are several things that you can deduct. We have some things added this year, so you want to make sure that you're catching up with all of those last minute deductions that you can get before December 31st. Did you buy that extra equipment? Did you get the extra thing for your business that you could possibly depreciate and get more deductions? So those are some of the things that we'll be talking about today.
Well, let's dive right in. Are we good with that? We
Yeah, I'm
ready?
excited.
Okay.
I feel like we're diving right in because Rolanda came on probably about a year ago or so. And I feel like we had so many questions and so much feedback, and they wanted more. Real estate agents, investors, just your consumer itself. Y'all wanted more of Rolanda Watson. So I'm so excited to dive right in and just get more answers from you about the tax industry.
Great. Looking forward to it. Let's go.
All right, so I'm gonna bring up depreciation because you set the stage with your intro. Tell me a little bit. Just start. Define depreciation for us.
I like to think of depreciation as the one deduction that you pay for one time and get the dividends for it over and over again.
We like that.
So, yeah, definitely for real estate. So, depreciation is a way that you can write off the value of your asset over time. For instance, if you have a real estate property, you can deduct it for 27.5 years. And you can deduct that over time. But what many people like to do is do something that they call a Section 179. That's where you take the full asset and you deduct it one time and you get the full deduction for it that one time. But you have to be careful because if you sell that asset before the lifetime of that asset, which means it may be 27.5 years for certain real estate or 39 and a half years for other real estate. If you sell it before the time, you have to pay the IRS back.
We
what
don't
you
like to pay them
depreciate.
We do not like to pay them back.
So I like to encourage my clients to just take your depreciation over the years for the time that you're going to have that asset. In real estate, a lot of times people like to look at what we call cost seg. We've talked about that
Yep.
a little bit. That's cost segregation. That's where you can take and depreciate everything in the house, the countertop, the sink, just every part of the asset in the house has a useful life, and you can use that useful life over the time and take a greater depreciation. But you want to make sure you get your appraisals done to see if the cost of a COGSEG is going to be worth the time and investment of that cost.
So how would I determine that? And maybe you have a story of someone that it's been helpful for them to use that.
Yes. So typically, I like to say if you have assets of at least $1 million or more, you want to look into an appraiser and get a cost segregation. They are going to look at the value of the asset plus all of the things inside of the asset to see if it's going to be worth you depreciate. And you'll be depreciating it over a period of time. And people have saved thousands.
I feel like that's already helpful.
Oh,
End of
yeah,
podcast.
right.
Like
All right,
just
that's
explaining
a wrap.
that instead of paying it all and not having any of that. I mean, you're already helping so many.
Oh,
Thank
wow.
you.
Thank you.
So that's with real estate.
Right.
What are some other things we can depreciate, or are there other things we can
Oh,
depreciate?
yes. Several. Anything that has a useful life. Your computer. If your computer is over $2,500, you can depreciate that. Furniture can be depreciated at $500. Your vehicles can be depreciated. And of course, in real estate, you're always in your car. So for our
Yep.
real estate agents, you have the option to depreciate or use your mileage.
Hmm.
So you want to make sure that you're looking at what's going to be best for you. I always like to tell realtors, take an assessment of what's going to be best for you. You're either going to use mileage or you're going to use your maintenance and depreciation for your assets. So that's something to consider that. But yes, anything that has a useful life, which means it's going to last more than 12 months and it's over $2,500, you can depreciate it.
Oh, that's a great definition.
Yeah, and I like that you sit down with the real estate agent or you sit down with the investor or the consumer and you say, "Hey, what is your life? What's the goal here? What are you trying to do?" And then you choose, okay, well, in your instance, mileage might be better.
Right.
In your instance, the car might be better. So I love that you kind of see what they need
Right.
and then you do your expertise from there.
Yes, I like to think of it as working with any of my clients, whether they're in real estate or construction or a truck or wherever you are. Your business is like your DNA. There's no one business that's the same.
Mm,
So I like to find out what your vision is, where you're going with your business. How do you want to retire with it? Do you want to leave it to kids? Do you want to just sell it all? What are we doing here? And from that, we take an assessment to find out how we need to take our deductions, what we're planning on doing. So it builds a relationship more than just a transactional situation
I
with
like
our
that.
client.
I think that's great. And so, what are some things we should be doing throughout the year? Because obviously, New Year's resolutions are coming up too.
That is
And
so
if
true.
you're like me, usually December 28th is when I'm like, oh no, oh no. So, what, but this is the year I'm going to change it. So,
This is the
This
year,
is the
Sarah.
year.
She's going on record. She's gonna
mark
change.
it down. No, tell me what are some things we should be doing along the way to make it easy come December
Right.
or January?
Become January to start
Yes.
the new year. So I like to think that all business owners should have business attorney or business accountant that they're working with, an attorney, insurance agent, and then always have liability or legal advice
Mm,
continuously because we have those different areas. I say that because our business owners, we specialize in what we love
that's right.
and what we do, but numbers might not be that thing
That's
or
right.
legal advice might not be that thing. So, one thing that I like to encourage when it comes to on my piece with accounting is that your record keeping is in place. We lose thousands of dollars. Recently, I did a conference with a group of women business professionals, and I showed them just in the coaching consulting field, there were over 80 to 100 deductions
Wow.
that we don't take. And a lot of
Hmm.
times it's because we're walking through life
Right.
and we're not thinking about the class that I went to last week or the business lunch that I had. We're just doing what's on our calendar, or we're taking care of our kids, or we're just doing life. And we don't think about those business transactions. So having a business account that separates your personal world from your business world is a necessity. Having record keeping that you're keeping up with those transactions on a consistent basis and you're going back and reviewing them
Right.
because one quarter is going to be different from another quarter. As a business owner, you need to know and understand where your money is going, how you're keeping up with your money, sending in quarterly taxes if we need to. And if you're on payroll or if you're an S Corp, please have a reasonable compensation because the IRS is paying attention to that. They're paying attention to it because it looks like you're trying to not pay payroll taxes or not pay self employed taxes. And those things don't work if you're trying to grow and advance your business. And then when you try to get a business loan, those financials come into play.
Mm.
They want to see that cash flow statement, that balance sheet, that profit and loss statement. They want to see that you're serious about business and you're not playing.
That's great advice. Do you recommend people hire a bookkeeper, or do you think it makes more sense to just do it yourself, or is this another situation where it's like there's not one size fits all?
There's not one size fits all when you're starting.
Okay.
As you're growing your business, you need a professional to look at what you cannot see or you don't know
Sure.
what to see. Um, Professionals, we have an objectivity that allows us to see what you're not looking at because you're not looking for it.
Mm-hmm.
And you don't even know what to look for.
We don't know what we don't know.
No.
As I say
Exactly.
that all the time. Like,
I can look at a 1040 and I see everything. I see your world.
What's a
on a
1040? No, I'm just
I was
kidding.
like,
I'm
uh-oh.
just joking.
Go back to the first episode.
But really, go back to the first episode. That's
But that's
hilarious.
because that's what I'm doing all the time.
Right.
You
That's
can
right.
look at a property and see something. You can look at a title insurance and see something. That's because that's our profession and that's our world. And when you try to tap into another person's industry, there's something that you're going to miss.
Well, I think you hit the nail on the head because you just can't do it all. You need to have an attorney, the insurance, that's your team.
Mhm.
And
Right,
if you have a
exactly.
team, you're going to succeed.
Yeah.
And it matters who's on your team.
And people might look at it from a monetary standpoint, like I can't afford a bookkeeper, I can't afford a tax specialist, I can't afford a transaction coordinator in real estate, but they're going to save you hundreds, thousands of dollars
Yep.
in the long run if you do hire these professionals to help you save.
You have one thing go wrong and you can't afford not to have that person on your team.
Exactly. I like to share that with people. Yes, when you're starting off, you want to grow where you can afford, but you want to make sure that you're putting aside and you find out maybe you can't afford a professional bookkeeper in the beginning, but maybe you want to start and have them do advisory work.
That's a great. Tell me about that. Like, what are some options to kind of dip your toe in?
Yeah, so maybe you have a person that you're building a relationship with and you want to ask them, "Can I talk to you from time to time to see if I have questions about my taxes or to see if my books look okay?" And if you're growing and building that relationship and you want to talk to them and find out, how much would you charge if we started off quarterly? If I speak with you quarterly, or how much would you charge if we're doing monthly? And as you're building that relationship with them, they see that you're interested, they see your story. We all have a business
great.
story. We want to make sure that that business story makes sense, not only to you, but to those that you work with. And as you're growing with them and they're growing with you, then you can start to say, okay, now I'm ready for you to come on as my professional. They already know your world.
That's
They already have
fantastic.
everything.
Well, and I like that because we work with a lot of professional investors who no one really starts as a professional investor. You start with one house,
Right.
or
Right,
maybe you
right.
live there and you are accidental landlord. And then the next thing you know, hey, this isn't so bad.
Yes.
But then it's overwhelming to take that next step. And so being able to talk to somebody professionally about it and just say, all right, this is where I want to go. How do I get from here to there? And a person would be, just invaluable, I think, for a lot of people.
Yes, I love to do that with people because, as I said, everyone has a business story. So we have to start somewhere. But to have those important people in your life to say, okay, how do I get from here to there? This year, let's take this step.
Yep.
And then we look at the books and see where you are in the third quarter and say, okay, are we ready for the next step? What's your plans for the next 2 years? Let's take these steps. So we take it in steps, and you have someone working with you on your team to help you get there.
I love it. We talked about investors, but I also want to talk about realtors because we have lots of realtors watching this podcast. And so I want to ask you, what are some differences? Most of them are 1099 contractors. What are some things they should be doing, or maybe mistakes you see that they shouldn't be doing to be successful when it comes to tax time?
So with our realtors, one of the things I see, according to the IRS, you can spend $25 on a client for marketing, or for their appreciation, or for their gifts.
And is that per year, per occurrence?
Per client?
Okay. Period.
Period.
Okay.
Per client. And the way that things are now, that's not possible. So one of the things I like to tell clients,
It's like a coffee at Starbucks nowadays. Just kidding.
The straw.
Just the straw. You get the straw. It's like, how did I get lunch and it was
Branded.
$27? I'm one person.
one of the things I like to tell clients is that if you are smart with it, give them something with your logo. Give them a gift that has your information on it. So it's not just a client gift, but it now becomes marketing. And the
Okay.
IRS doesn't have strings on marketing.
Gotcha.
Another thing that realtors do is they start and stop and start and stop. We understand that you have lean seasons, but again, we're building relationships.
Right.
And so if you're working with a professional and you're start and stopping, and they don't hear from you because there's a lean season, we understand that you have lean seasons. Just make sure that you are doing those things that you can handle in your lean season. If you're starting off, maybe you want to start off with Excel and you're keeping your records up in Excel, but you have an advisory that you're working with and you're calling them and saying, hey, I need this help. Can you answer that question? And you don't mind paying for those answers.
I have a couple more questions on that, what they can and can't do, but we're going to shoot over for a quick commercial break for our commercial sponsor, and we'll be right back.
When your home is damaged by fire or water, it's more than just physical, it's personal. That's where Renew Medic steps in to make the process a little easier. They understand how stressful it is when your kitchen is disrupted. That's why their cabinet restoration process is built to be fast, safe, and minimally invasive. They remove damaged cabinetry fast so you can get back to normal sooner, support your countertop so you can still use your sink, dishwasher, or cooktop, and work efficiently to bring everything back to how it was. Whether they're restoring custom or standard cabinets, refinishing surfaces, or matching finishes and color, their goal is simple: to help you feel at home again as quickly as possible. You shouldn't have to face this kind of disruption alone, and with Renew Medic, you don't have to. They are here to help you rebuild one cabinet at a time.
Welcome back. We have Rolanda Watson here. She's talking about the do's and don'ts for real estate agents right now whenever it comes to taxes. So, a big question we get, if a real estate agent has a child, what can they pay this child to work for them so that they can write it off?
Great question. So, not only realtors, but those that are working can pay your children to do things that are age appropriate. For instance, if you have a 5-year-old and you take pictures of the 5-year-old and you put those pictures on Instagram with the little cute sign that says running to my next house or something like that, that child has become a model. And that child can be paid an age appropriate wage up to standard deduction. Every year, the standard deduction change. The child needs to be up to age 16 years old. You might have a teenager that is shredding paper, cleaning the office, filing papers for you, stapling. You have them going out and putting the yard signs,
Mm-hmm.
putting the yard signs up, putting advertisements for your open house. All of those are job descriptions for your assistant that can be paid up to the standard deduction. And what I mean by that, this year it's up to 14,000. Now, I have several things that I tell people that they can do with that to help them, and there's a strategy behind it, of course. And we talk to you about what you want to do, what your vision is for your child, and how you want to handle that. And we put those strategies in place. We do the things that the IRS requires for you to be able to write off or hire your kids.
Okay, question. Is that 14,000 per child?
Yes.
Oh, yeah. Hey, have you done that math?
Why do you think we keep having kids? No, I'm just kidding. I'm kidding.
love
We
it.
just had a
Sarah
baby.
just had her
Poor lady.
4th kid. He's 5 months old. Oh my
So
goodness.
he's not a model yet,
No.
but he's in the pipeline.
He's in the
fine.
pipeline.
I have a
That's
wheat
awesome.
puller who's 11 who listen.
Love that.
He loves it less than we do, but
loves it
he'll
less
love
than
it
we
one
do.
day.
Okay.
For property management, you can have them take pictures of the property. drive by.
Absolutely.
There you
We've
go.
got
There
we've
you
got they're expert sweepers. They know how to clean roaches. Like
Yes.
Clean
we've
roaches.
done some like events and they pass out water bottles. It's all sorts of things. kids can
14,000
do.
per child.
I mean, they're well paid for passing out water
That's
bottles. but it's
hilarious.
fine.
Okay,
Now,
so
the model cannot be paid 14.
No, like
Age appropriate.
asterisk.
Age appropriate.
Yes,
Okay.
absolutely.
age appropriate, income
They
appropriate.
gotta work for it.
So let's talk. We're talking about strategies, right? So a lot of Houston agents are self-employed. Okay, so what do you have as far as advice goes and strategies for when they get compensation, but then they might not close a deal for another couple months? What should they do with that compensation and strategize from a tax standpoint? Does that make sense?
Yes.
Kind of. Do you want to summarize it a little
I
bit?
think you got it.
Okay.
Yeah.
Okay. So what I'm hearing you saying is, how do they pay themselves and keep money during the lean times?
Right.
And you know what? I love that you said that lean seasons.
There-
She has said that a couple times today, and I'm taking that away. Like, you have lean seasons, and we need to know when those are. Okay.
Realtors have lean season.
And they're predictable. So planning is key.
Planning
Yeah,
is key.
Absolutely.
So, what advice would you give them?
So I like to share toss. Some people may not tithe, but it's tithes. It's paying yourself, your operating, your savings, and your other strategies that you have. So when you pay yourself, you pay your time for your time and your tithe. So you pay yourself first.
Okay.
Then you pay for your operating expenses. You should have an idea of what your operating expenses are. Then you put some money aside for your savings for your lean seasons. And then you strategize for any savings or other things that you want coming up. You should have investments that you're looking for, other classes that you're looking for to excel yourself in your business. That's what I mean by strategize.
I like that. And you said TOSS,
I
TOSS.
love that.
Time, tithe, operations, savings, and strategy.
Love it.
That's fantastic.
But you definitely want to pay yourself. I see so many, not just realtors, but business owners. You find yourself in a position where as soon as that house closes, you have so many bills that you have not paid. And so you're just paying, paying, and paying, but you didn't pay yourself. You didn't put money aside for yourself. And then you didn't cover any operating. So you want to get to the place where you're proactive instead of being reactive for your
That's right.
business.
Makes sense. Now let's switch gears over to the consumer, the home buyer. Property taxes. We love property taxes. How can they strategize for the rising of property taxes once they get into a home?
Once they get into a home, first remember when you close on that home in January, you want to go and file for your homestead exemption. So many times we forget about it. If it's a new home, then you probably got in the house and there wasn't taxes to pay, so that house note is less. But you don't do that homestead exemption, that automatically saves you 20-25%.
And now you can do that at any time after
Right.
you close. You do not have to wait on the specific date. If I close today, I can file for homestead exemption.
As soon as you close.
As
Yes.
soon as you get your new driver's license.
Yes. There you go. The little tidbit.
As soon as you get your
As soon as you have the forms, but you no longer have to wait.
Yes, it's huge.
close.
Yeah,
on it.
huge for tax
And realtors
savings.
should be adding that to their to-do list to follow up. So if you have a client that closes 2 weeks later, hey, did you get your driver's license yet? Here's the link, because you can do it online. It's so easy and it saves so much money. I had somebody who wasn't a client reach out once, and they had been in the house 5 years, never filed an exemption, which means their taxes, and this is in the 2020 era when we saw taxes skyrocketing,
Right.
no cap, no homestead cap, and no homestead exemption. So it was like, oh,
So they had to go and file for a refund.
they did, and I don't know how that ended. I should follow up, but
That's a great follow-up.
I'm like,
Because I do like that. 2 weeks after closing, that's an easy touch point for our realtors to contact their consumer, their buyer, and just, hey, have you filed for this? Do you need the link to change your driver's license? Easy touch point for you guys.
But you'd be amazed once I get to the table with their taxes and I look at that 1098 and I see that the taxes are high. That's one of my questions. Have you filed for your homestead exemption? And the taxpayer is like,
what?
What's that?
exactly.
Because there's a lot of things happening through the home buying process, so they're very overwhelmed.
Yes. And that's why the touch point of 2 weeks, and I would even say after that.
Absolutely.
Before that year ends, before we come into the new year, that you follow up with them, because it is even after the closing table. Once they get to the house and they have to get this turned on, they have to get this done. It's a thing. But with property taxes, you can save with the homestead exemption. You also have an over 65 exemption that a lot of people don't realize that they have, that they can save money on. Our seniors who are really within a fixed income.
Right.
Checking that every year, making sure that your taxes are comparable to the area that you're in is important. You're going to receive that notice. You're going to receive that notice
Soon.
in October for that. So with us in December, you should have already received your notice for that, and you should be looking for that to see where your taxes are in comparison to your neighbors. Now, there are companies that you can work with that will help you look at that. You want to check with your realtor, check with your accountant, or your title company, and see if they have a company that they can refer you to that will help you save on that. Another thing that I want us to remember here in the state of Texas is that we don't pay state taxes. So sales taxes and property taxes are some of the things that go back into our city. So we have to be aggressive about making sure we're paying what we should pay in those areas.
And I think that brings us to a good point. You are licensed in Texas
I, I do,
and
and I do work with companies in Texas for the property
okay,
taxes.
but
Yes.
you're also a licensed tax professional in Louisiana. Am I making that up?
Oh, no. As far as a tax
Yeah.
professional, I have all 50 states.
All 50 states from
Yes,
okay,
yes,
good.
yes. I can
Okay.
handle your taxes in all 50 states.
And that's good to know because we are being viewed from California and Florida, New York.
Hi,
So,
New York and California.
hi, thanks for watching. But yes, she's licensed in all 50 states.
Yes.
So when you started talking about in Texas, I wanted to make sure they knew that.
Yes, that's for the property tax.
Mm-hmm.
Yes, but we don't pay state taxes.
Yeah.
And I talk to a lot of taxpayers, and they're like, "Oh, I have to pay this my state taxes."
You're like, sorry. I am
Right.
so sorry. No.
right.
Okay, so switching, let's go real estate investor. So, what are some things that they should know whenever it comes to property taxes rising year over year?
Yeah, they don't have the benefit of the exemptions that we have.
Okay.
granted us.
Womp womp.
Womp, womp,
And she was like,
womp.
yeah.
Yeah.
That's where savings is going to be important for them, and partnering with, as I stated before, someone that does the protesting, because you can always have someone, or you yourself can fight and advocate for yourself to make sure that you're paying the taxes that you should pay in the area. You want to make sure that you're paying attention to the comparable houses to see the prices of the houses in the area, and not the prices that are just coming up.
Right.
You want to look at the houses that are older in the area and make sure that the taxes that you're paying are what you should be paying within that area.
You had a great question before we went on air, and sorry to put you on the spot, but what if the value comes back lower than what you would like? Do you fight it? Or do you just say, hey,
so we
it's
have
lower?
seen, because 2020, 2021, 22, values just skyrocketed. A couple of them in the last year or two have decreased in value, and the counties recognize that. So I've had the call of, should I still protest it, or should I just like not draw attention to the fact that they lowered my taxable rate?
And
it's
maybe
like,
it would depend
I
on
don't know.
how
Yeah.
long they're going to stay there. If this is like their forever home, then don't protest it and like, yay,
But
hallelujah.
a lot of it's investments, and where that comes into play is in your rent rate and what you're cash flowing. Because if your taxes are eating up all your margin, I mean, the reality is, unfortunately for investors, you're passing that tax on burden onto the renter. And so we want there to be affordable housing, but like you said, it's a balancing act with.
Right. And so I would say to that, don't just look at the tax piece, because there's maintenance that's needed. So will you have to work on the roof this year? What's going on with the siding? So you could still justify, not to say that you want to overcharge rent,
Absolutely.
but you could still justify
That's good.
maintaining or keeping that, or increasing a 3%, or
Yep.
inflation, or whatever the comparable thing is in that area. But as far as reporting to the authorities that you're not gonna
Reporting to the authorities.
I wouldn't. I'd leave it alone.
Leave it alone. Ah.
Hey, just
Hey, you
post
got your
that-
answer.
Post that to the bank. Yeah, take that
got your
money to the
answer.
bank. I like it. That's awesome. So fun.
I don't know if I've had that one before.
I know. Well,
But I mean,
truly happened to me a couple times personally in this last.
I was going to say
year
few and far
where,
between, but
well, I mean, a couple, and I looked at the value, and I was thinking, okay,
What
I'm
do I
fine
do?
with that. Where do I write the check?
Right.
So-
fine with that. Where do I write the
Where-
check? Yeah, I like that, including maintenance.
I did have.
Now, let me
Oh, go
say
ahead.
this.
Yes.
Then make sure that you have your paperwork to justify it
Absolutely.
if anyone comes back. That paperwork is huge in all stages of our life.
Well, and I think with the way I was encouraged, because it means the county's really looking at the values that are out there, because we all have seen some shrinkage of home values. And so not tremendous in our area, but a little bit, enough to say, we shouldn't be paying more in taxes. So we'll take it. Thank you for telling us all the ways that we can pay less to the taxes. Let's talk a little bit about how we can make more money to begin with. So I have a couple questions here from our investor audience. And the first one is, tell me about LLCs. Do we need an LLC? We get this question all the time. What are the tax benefits of an LLC?
Okay. That's a great question, actually. First of all, an LLC is a limited liability company. Some people feel like it's a limited liability corporation. It is not a corporation. It is a legal entity. For taxes with the IRS, it is still considered a disregarded entity. So we still treat it like your normal Schedule C, or if you want to put it on your Schedule E, which is for rental income. But there's no special provisions from the Internal Revenue Service for an LLC.
That's a great answer. So for taxes, we don't really need it.
No, it is
But talk to your, yeah, I was like, but talk to your insurance people. That's perfect. The other question we wanted to talk about is passive versus active income, flipping. There's so many ways to be a real estate investor. So you can flip, you can have a long-term rental, you can have a short-term rental.
Right.
Talk to me about those and what are the implications of each?
Okay, so the key is it active or is it passive? Do I get this income just because I have this asset and I don't work for it?
Passive.
Passive. Or am I actively working for it every day? Am I flipping it? Am I bringing a rental in or moving a rental out? That's where you know the difference between the two. We call it, in our industry, we file a Schedule E, which is for your rental income, which is typically passive. I have houses, I hold. I have investments, I hold. If I'm flipping, I'm moving it from year to year, I'm buying, selling, I'm actively participating in the producing of income. That is inactive. That would go on a Schedule C.
So what does that mean in terms of what I'm
Right.
actually going to pay?
Right. So when you have Schedule C income, according to the IRS, we're going to pay self-employment tax, which is our 15.3%, which goes to Social Security and Medicare on both the employer and the employee side. When you add those together, that's the 15.3%. If we have passive income, we're just going to pay capital gains. Right now, that capital gains is 0, 15, or 20%. So that's the main difference. So you want to be careful with that. Passive income will still have deductions. However, there are certain requirements if you are a real estate professional that will allow you to take up to 25,000 in losses. You want to be careful with that because there are certain rules. You want to specifically talk to someone about that and making sure that you have those for the passive losses. For active, again, it's just like your active business that you're pursuing for day to day, month to month. We can take those losses on that, but you're going to be taxed 15.3% plus your regular federal tax on the income side.
That's super helpful.
And
So
you're looking at her because you know she knows her stuff.
I
Like I could
know.
listen
And
to her all day.
absolutely. I'm like, I didn't bring my notebook.
Oh, where is it? Where is it? Good thing we can watch it.
I was going to say, rewind. Thank you so much. That
Yes.
was just so helpful.
So helpful. And I know the last time you were on, we talked about you being an EA, which is an enrolled agent. So just to finish out here, can you tell us what that means to the viewers and what that looks like?
Sure. A few minutes ago, you asked a question about me being licensed to work in different states. Well, an enrolled agent is credentialed by the IRS, specializing in taxation to work in all 50 states. A CPA, we're comparable to CPAs and attorneys. A CPA is licensed in their particular state, and they have to go through other things to be licensed in other states. Enrolled agents are able to practice before the IRS, which means that we handle your tax issues. We talk to the IRS on your behalf. We're able to handle advisory, planning, just all of your tax world. We're able to handle that and represent you, as
Huge.
well as educate you.
Huge. Thank you for educating us day in and day out. Seriously, I could listen to you all day. But with that, we will go ahead and end this segment. It has been amazing having you on again. Thank you. We hope you come back again.
So fun.
All the questions that they give after your segment, it's like, okay, Rolanda is needed. And yes, thank you for everything. But anyways, I am your co-host, Kayla Ewald with First American Title.
And I'm Sarah Lerner with Real Vest Property Management. Thank you so much. and
We'll see you next
next
time.
time.